Hi everybody, this is the investing teacher, high school science teacher, teaching others how to invest. In this clip, I'm going to be showing taxes, IRA, and Roth IRA that I actually talked to my homeroom during homeroom class, okay? Because they're a little bit interested in budgeting, just how to deal with money and whatnot. Just try to do a quick overview of taxes. Hope you enjoy it. Any questions, let me know in the comments. Smash that like button, all that good stuff, and I'll talk to you guys. Let me go over the basics of taxes first. So let's say you're working a job and you make $10 an hour and you do it for 100 hours and whatever. 10 times 100 would be $1,000, right? So you'd make $1,000 for the money that you earned, right? Unfortunately, you're not going to get the whole $1,000 in your bank account. We're going to take out money to little uncle of yours. His name is Uncle Sam, and they're going to take out maybe about 10% of that in total taxes. That's like Social Security, Medicare, income tax. So about 100 or so will come off right off the top. You're left with 900, right? Because 1,000 minus 100, you have 900 left. With this 900, you got to figure out what you're going to do. Here you might have some fixed expenses. You got to pay for your rent, car payment, food, all that stuff. And then you might have some variable payments, right? Going out to dinner instead of cooking might cost you more money than it would to just cook it yourself, right? Going out to a movie instead of watching something freer on Netflix or whatever. What I recommend everybody do is to have a third column, and your third column should be for savings. You got to save for a rainy day and save for different situations where maybe you're not making this amount of money, right? No. No. So random ant. Okay. All right. So in taxes, there are things you could do with this tax bill that could be helpful later on. If you just leave your paycheck the way it is, and you have your $1,000, you pay 100 to Uncle Sam, 900 left. There's other ways you could go about this that will help lower your tax rate. One way is called a regular IRA. This is how an IRA works. Let's say you're still making the $1,000, but you decide to put money away in an IRA first. So let's say I take $50 of the 1,000 and I put it in an IRA, okay? At this point, the government says, since you're putting this $50 away for much later in the future, 1,000 minus 50 is 950 left, right? So the $950 that's left, you'll be taxed on this, not the 1,000. So remember before we said it's about 10% or so of all the money you make goes to Uncle Sam. In this case, it might be only about $95 goes to Uncle Sam instead of 100. You're getting a tax break for putting this money in an IRA. Now, the issue with it is, though, this money will grow over time. You should leave it mostly in valuable companies like the stock market, where as they grow and do better, you own part of it, you grow and you do better in this money. Eventually, when you take this money out, you will have to pay tax on it, though. So this will be taxed after. Maybe that $50 in 20, 30 years turns into $1,000. You have to pay income tax on that 1,000. Okay? That's essentially how an IRA works. If you make a large income, IRAs are very valuable because then you would lower your tax rate, at least currently. There is another one that's very similar, and this is called a Roth IRA. Again, back to your $1,000 that you make. In a Roth IRA, let's say I'm putting away $50 into it. Okay. Unfortunately, in a Roth IRA, you will still be taxed on the $1,000. Okay. You'll still have to pay about $100 in tax. It's about 10%, give or take. So that's the bad part of the Roth IRA at first. But the good part, and this is an amazing part of a Roth IRA, this money will grow tax-free. You already paid the tax on it because of right here. It's like money that came out of your checking account in your bank. This will grow tax-free, okay? Let's say you're investing the $50 in Apple, and Apple makes all these new hologram watches that make all these fun games, and you're doing Apple of everything in the world. $50 might grow to, say, $2,000. Whenever you're ready to take that money out, you could take it out with zero tax. I personally invest only in a Roth IRA right now. We max out the Roth IRA, which is $6,000 a year. And my wife does the same thing, $6,000 a year. All that money will grow tax-free. It could end up being more than $1 million if we do this every year. You let it grow for 30 plus years, and then you take it all tax-free. So I highly recommend the Roth IRA, especially when you're not making a ton of money, because your tax bill is not that much right now. In the future, let's say you're making a lot of money, you might want to consider a regular IRA. You can actually do a little of both too. So you have different accounts where some might be taxed now, some might be taxed later.